Welcome back. Up now, we'll take a look at the markets with Catherine Murray. Catherine is the host of The Buck Stops Here, and she joins us now. All yours, Catherine.
Thanks, Nima. Hello, everyone, and welcome to your weekly market recap. I'm Catherine Murray. Well, we are seeing markets trading in mixed territory today, and we have continued to see a lot of swings once again. That is a narrative that is not changing anytime soon. But we have seen a little bit of stability or stabilization within the markets, really driven by a reprieve in yields, the interest rate environment, that is, with the U.S. 10-year yield down by 40 basis points. That has certainly been helping some of the higher valuation stocks, such as tech stocks, as well as the growth areas of the market, which of course have been under such significant pressure as we've seen rates rise within the yield market or the bond market, and also of course on the back of the U.S. Federal Reserve raising rates, and also of course the BOC. That's put a lot of downward pressure on those higher multiple stocks. We're also, of course, seeing WTI, the price of oil, which has pulled back. That's actually been supportive for sentiment in the broader markets, easing some of those input fears or input costs, I should say. WTI, in fact, is down by about 16% since its recent high on June the 14th. So that is, again, alleviating some of those inflation input cost fears that investors have, and of course, corporations do as well. Another bullish case for the market: oversold conditions. I mean, we have seen these markets trade down 20, 30%, depending on the stock or sector that you're looking at. So again, perhaps there's a little bit of buying opportunity. As well, some of the recent economic data has actually disappointed. It's almost bad news is good news. And why I say that is because if the economy is in fact slowing down, perhaps the U.S. Federal Reserve will not have to be as tight or as aggressive in its tightening mode. So in other words, perhaps what they've already been doing is working. And perhaps as well, we were already starting to see some of the demand destruction. So again, all of those are acting as tailwinds for the broader market. Now, of course, still many investors are very concerned about rising input costs. We know that food inflation is still very much present. And even though WTI is down, it is still at very elevated levels versus what we've all been experiencing over the past number of years. So the fear, of course, is that will put pressure on corporate profits. And therefore, there is an expectation from some investors, the bearish investors, that we will see downward earnings revisions. And then, of course, you have to apply whatever market multiple you believe we will see on those corporate profits or downward earnings revisions. So that is the bearish case for the market. And also, we're concerned, or investors are concerned, that the U.S. Federal Reserve will in fact induce a recession. Now, we have had one U.S. quarter of negative GDP. We'll see what the next one brings. 2 quarters, of course, equals a recession by definition. Some, in fact, say we are already in that camp. Now, away from the macro picture, important to take a look at a few stocks to watch and sectors as well. We are seeing U.S. oil stocks, banks, materials, and airlines all lagging. But interestingly, you're seeing home builders, technology, big box retailers are among some of the best performers. Again, the technology stocks, of course, were really hit by the higher rate environment. With a bit of a reprieve, you do see those stocks start to outperform a little bit, which is what we're seeing today. 2 stocks to watch: Snowflake in the SaaS environment, software as a service, that is. That's up by about 8%. It was actually up by 10% earlier today. That is following an upgrade over at JP Morgan to an overweight position, setting strong results in their recent CIO survey. So in other words, chief investment officers that are looking for a software as a service company, apparently like Snowflake. We're also, of course, keeping our eyes on KB Home. KBH is the ticker there in the home builder sector. They had a nice second quarter beat driven by higher prices and also better margins, helping that stock up significantly today. And the TSX, meanwhile, is trading down by about 1.5 to 1.7%, close to the lows of the day. I am taping this at about 2 o'clock. Energy, materials, and financials are lagging the broader market. The Canadian dollar is lower versus the US dollar. And interestingly, as we look at the inflation data out this week, that of course was the big news, Canadian CPI for May rose 7.7%. That was higher versus expectations, and the highest reading since 1983. The next meeting is July the 13th. Expectations are for a 75 basis point hike. But interestingly, JP Morgan is out saying that that perhaps we could see the BOC raise by 100 basis points. So a lot to watch for. There's no doubt about that. And of course, global slowdown fears also weighing on the broader market as more central bankers around the world continue to raise rates. Again, we'll see what the BOC does on July 13th. Nima, I'll leave it there. Back to you.
Lots to watch indeed, Catherine. Thanks for that. For more on the markets, be sure to follow Catherine Murray on the Buck Stops Here. Up next, we're going to take a look at news happening around the world. So stay tuned. Forum Daily will be right back after a short break.